Hello, everybody, and welcome back. Today, we are going to be talking about Ethereum. But before we go in and do that, I wanted to go over the total state of the market. So as you can see today, we're sitting in extreme fear, pulled a little bit back from yesterday. As you can see, yesterday we had a little bit of a bounce up to about 29, which put us in the more of the fear category. But today we've pulled back again into the extreme fear. The biggest reason for this is there's been a lot of volatility down around the bottom of the chart. And so that's why, we're kind of bouncing back and forth between fear and extreme fear. So that's kind of the reason for that. Overall, nothing fundamentally has really seemed to change in the market other than the fact that there's a lot of fear and uncertainty going around. So if we look at crypto bubbles, this is going to show a bit of a different story. As you might be able to see, there's a lot of green in the market today. As I said, there's been a lot of volatility, very big ups, very big downs. So this is showing that right here. So you can see XRP is the big winner. If you didn't see the news, XRP closed their lawsuit with the SEC. So they have to pay $150 million, but after that, they can continue to trade and interact and do everything as they have been in the past. So this is ultimately very good news for XRP, which is why we're seeing the price jump so much. Everything else you can see, it's an overall just green day in the market. But back to what we wanted to talk about today is Ethereum. I've heard a lot of people speculating recently that ETH is dead. What's going on with ETH? It's essentially been kind of underperforming the market, particularly Bitcoin, for quite a while now. And so I just want to zoom out on this chart and we can look where we're at kind of in relation to where ETH has been over the past, year. Well, I guess about 2.5 to 3 years at this point. So as you can see here, obviously we're down quite a bit from our all-time highs. We started to approach back towards all-time highs in about like late March. But since then, we've seen things pull back quite a bit. This bounce here was, I believe, on the news that the ETH ETFs were going to be approved. So we saw a bit of a bounce here, but then since then, that was kind of like a buy the rumor, sell the news type of event, as you could see, because everything has essentially just been going down since then. But overall, this massive pullback that we saw here was due to the crash that we saw last week that obviously has impacted everything. Looking at the chart, obviously it's up quite a bit from, kind of like the FTX and Luna collapse lows. That's where we got down to this, at some points it was, sub $1,000 Ethereum, which looking back, even still after the pullback, this week, that wouldn't have been a bad buy. The next chart I wanted to show here is Ethereum to Bitcoin. So as you can see, in late 2022, when Ethereum was at its all-time highs, it was really strong against Bitcoin. You could see here, this is typically kind of how the 4-year cycle plays out. At least as we've seen in the past. Bitcoin goes on a huge run up to its all-time highs. And then, of course, we see Ethereum draw down because it's getting weaker compared to Bitcoin. And then after Bitcoin has hit its all-time highs, that's when the greed comes into the market and we start to see, people looking for gains elsewhere. And so then we usually see, Ethereum running up, getting strong against Bitcoin again. And then obviously, we get L2s and meme coins and Ponzi-nomics and all this other stuff that follows after that. But as you can see, since that last all-time high was hit, it's basically been nothing but down. Ethereum has been getting continuously weaker against Bitcoin. And as you can see here, we've actually, broken out of what the previous low was. I think there's a couple different things going on here, but the main thing is the concern of, well, is Ethereum dead? Is Bitcoin just the better option overall? Does Ethereum even have a place in the market? Things like that. My argument here would be, yes, obviously, ETH does have a place in the market. Essentially, if people are considering Bitcoin as digital gold, Ethereum is almost like the decentralized internet, or, how decentralized apps can be built on the blockchain. So Ethereum still definitely does have a place in this market. And this is something where, and part of why I wanted to talk about this today is to discuss, is this a good possible buying opportunity? Because the market is underestimating the value of Ethereum compared to, other opportunities. Based on this chart, there's one of two things going on here. One, Ethereum is maybe losing its advantage that it had in the past, and it will slowly bleed away to Bitcoin and others. I know Solana has been doing very well in this market compared to the performance of Ethereum. So is Ethereum starting to lose its place, or is the market just underestimating Ethereum and the things that it has going on? So the next thing I wanted to look over is the ETF tracker. So as we can see here, this is all of the ETFs that are either currently running or pending. These are all, well, most of them are futures, which have not come out yet. But as we can see, the total market cap of the Ethereum ETFs is about 7 billion, almost 8 billion, with about $53 million of 24-hour volume. If we compare that to the Bitcoin ETF tracker, we can see that Bitcoin is doing about 20 times the volume in 24 hours and has about 10 times the market cap. As we can see here, the institutional market is obviously prioritizing Bitcoin very heavily, which kind of makes sense. I think as we're looking through institutional money and institutional investors, they're a little bit slower, behind a lot of what us crypto native people might be. And so at this point, I would say Bitcoin is a new shiny object to them, and they're still trying to understand and essentially sell that to their customers, right? So that's why this Ethereum ETF is, I would say, lagging behind Bitcoin, because Ethereum is essentially second to Bitcoin, and Bitcoin hasn't necessarily received the level of saturation in the institutional market that might start drawing eyes to other opportunities. This is something that, obviously almost $8 billion in market cap is very substantial, especially given that this ETF is just over a month old. I would say that's still a very big win for Ethereum, but I would imagine that it's going to continue to lag behind Bitcoin, at least until people start to get a better sense of the crypto market, particularly more retail attention comes. So the next thing I wanted to take a look at after that was this chart brought to you by Ultrasound Money. And essentially what this chart is showing is the Ethereum supply after the merge, which happened about 2 years ago. One of the things that people don't really understand about Ethereum is the fact that Ethereum actually has the ability to become deflationary. As I'm sure you're aware with Bitcoin, Bitcoin is inflationary. Its inflationary mechanism is on a logarithmic scale, which means it inflates super, super fast over a short period of time, and then it kind of levels off to basically almost zero over a very long period of time. So Bitcoin is always inflating and more supply is being added that essentially is printed out of thin air. Ethereum has a similar mechanism where the chain essentially will issue Ethereum. However, there's also a burn where I believe a portion of the gas fees are burned on the Ethereum chain. So essentially, if gas fees become higher than the amount of issuance of Ethereum, then this essentially makes Ethereum deflationary. We can see that on this chart here. Ever since the merge, there are actually less Ethereum in circulation than there were prior to the merge. However, as you can see, since gas fees have been low for essentially ever since April, the Ethereum supply hasn't started to inflate because of the lower gas fees. Not as much as being burned, essentially. This is something that you can monitor and keep an eye on. But the important thing to take away from this is Ethereum does not inflate nearly as much as Bitcoin does. And also, as we've seen here, it actually has the potential to become deflationary. This is something in the future that could cause a supply crunch for Ethereum, which again, supply crunch would very positively impact the price typically. So if you're interested, you can kind of keep up on this chart. I'll probably bring it back to the channel every now and again, just so we can see what Ethereum's doing and where it's at. But so this is only one piece of the puzzle, right? This is purely the supply of the money per se, right? The other thing that you need to have, if you're effectively claiming to be the next internet or the decentralized version of the internet, is you need to have two things. One, developers, people to build the things that you are wanting people to come participate in. And then you also need to have users and transactions, because transactions is how the chain makes money. So first we'll start with transactions on Ethereum as a whole. So you can see here, essentially it's taking the average of the previous 7 days and it's giving you a number every day. So what we can see here over time is a pretty nice uptrend overall, right? Like the daily transactions on Ethereum are continuously going up. Again, as we can see, after the halving, in about April, things have started to trend down. But even at the lows that we're seeing here, I mean, this is still higher than, a lot of what we were seeing even in just like last October and even, a year ago. So this is something where, higher highs, higher lows, the transaction volume is moving up on Ethereum, which says to me, people are transacting on Ethereum more than they were before, regardless of the price action. So this is something that is encouraging to see, and it's something that, we want to keep an eye on to essentially gauge the health of Ethereum as a whole. We'll also look at the developer reports, and essentially what this is this shows you the developer activity on Ethereum as a whole. So this developer report is essentially a report showing the developers in all of crypto. Since Ethereum is like the internet of crypto, many of the developers sit within the Ethereum chain. So we can see that there's about 26,000 monthly active devs. Again, this was updated as of July. We haven't seen any August numbers come in yet, but as of July, there were about 26,000 monthly active devs with about 7,600 full-time. You can see the chart over time. We peaked in, kind of late 2022, which again was that was the height of last bull market. And since then we've seen a downtrend. However, if you look over time, even though we've pulled back from these all-time highs, I mean, we're still double kind of the last stabilized, amount. So this is something that is very encouraging to see and actually really promising. I would imagine, this number might jump up to 50, 60, 70, 80,000. And then maybe it comes back and pulls down to, 40, 50,000. This would be something that would be very encouraging to see and very positive for the overall health of the developmental environment of blockchain. So the next thing that I want to talk about is layer 2s. As you may be aware, it is very expensive to transact on Ethereum. Ethereum has the highest level of security, but there are a lot of transactions that people are wanting to make or that need to be made that don't necessarily need the highest level of security. So this is where layer 2s come in. As we can see here, we're going to see a total value locked within layer 2s. And as you can see, ARBITRUM has about 40% of the market share, with Base and OPTIMISM coming right behind that. It is healthy for these chains, but you can see all of these other chains where they haven't reached the wider audiences. Base is Coinbase's network, and so this has obviously drawn a lot of users from Coinbase. And then ARBITRUM is one of the older layer 2s. They launched at the end of last bull market, but then their token released somewhere in the middle of the bear market. So these guys have developed, I would say, a pretty strong user base that has kind of stayed around through the bear market, which is why I think there's so much value locked within ARBITRUM, and it's got pretty committed users. The next thing I wanted to go over is the activity. So this is the activity on each of the layer 2s. So we can see, over time, we've got the transaction counts. Obviously, transaction counts on layer 2s are going very, very well. We've seen a lot of transactions, and they continue to increase over time. Stable coins also increasing on layer 2s, which is good. Fees paid by users obviously has come down quite a bit since March, when there was most of the activity in the market. As I said earlier, gas fees have been a lot lower. So, the amount of money that people are paying to conduct transactions is a lot lower, which isn't necessarily a bad thing. I mean, it's a bad thing for the layer 2s, but it's not necessarily a bad thing for us. Here we can also see the total market cap of layer 2s. Again, similar story. The peak of the market cap was in, mid to late March. This was the last point that we saw, a lot of action and a lot of interest in the crypto space. Since then, things have started to sell off. And then, obviously the most recent sell-off has caused quite a dip there. In my mind, the more important thing here is the layer 2 weekly engagement. As we can see over time, the weekly engagement in layer 2s has absolutely skyrocketed, which is a very encouraging thing for both Ethereum as well as layer 2s. This means people are starting to see the value of layer 2s, and they're starting to more widely adopt the value that these layer 2s provide and understand some of these use cases that might be relevant. So as we can see here, Base actually is the one that has the largest number of weekly active addresses, with ARBITRUM behind that. Again, past that, there's quite a bit of drop off. One thing that I find a little bit interesting is, even though OPTIMISM was third in terms of total value locked, they're actually quite a ways back in weekly active addresses, with only 4% of the total, which is quite interesting. And I would say maybe not necessarily the most positive news for optimism. But one thing that I think is pretty clear to see here is if we were to start forming a narrative of, maybe the purpose of these chains, Base might be better for, higher volume, lower value transactions between a wider base of users, where Arbitrum would be one where people who are trying to exchange more money and are using more maybe high value but lower volume transactions, that might come on Arbitrum. And then obviously anybody who's trying to do a super high value transaction, that would be posted on just the Ethereum mainnet. Obviously it is going to cost more, but the added layer of security is something that is definitely worth it. So that's kind of the state of the overall Ethereum market. As you can see from the data that we've been over today, things actually look pretty positive to me. And so this is something that could potentially be an opportunity to go heavier into Ethereum and maybe see some outsized returns, because at least from what I'm seeing, the volume continues to go up in terms of transactions, the interest continues to go up in terms of developers, the number of transactions on the Ethereum base layer itself continues to go up. And this is something that we can see going through pretty much everything and all of the data that we've looked at. Total value locked also additionally continues to go up. This is something that I figured would be helpful to go over today, given some of the speculation and the fear surrounding Ethereum specifically. Hopefully, if you found this valuable, you'll hit the like button and subscribe for more content. I'm planning on releasing daily videos covering both recent news and crypto updates in the market, as well as hopefully some deeper level analysis into specific projects like Ethereum, like we did today. Thank you for tuning in, and we'll see you in the next video.